Hello everyone, and thanks for tuning in to the Financial Investor channel. My name is Brent, and today we're going to be doing our weekly recap for January 22nd through the 29th. This will be our third week of 2018, so we're going to actually go over what was posted over on Facebook throughout the week. I posted a couple articles on here that I thought were fun and interesting. We're going to be covering the three main indexes. We're going to be covering the percent differences in my portfolio, some of the stocks that I traded this week, the dividends that was paid out, and then take a look really quickly over at a few stock fundamentals, mainly StarBucks and NWL brands. I believe those are the two that I'll kind of be showcasing today, and some of the news I kind of went over, Wynn Resorts. So let's go ahead and cover some fun information this week. So right off the bat, I released a video about a couple that lost $2,500. They were storing $2,500 of cash in a Campbell soup can. I went over the idea, what if they had invested in Campbell soup instead? So they invested $2,500. They came out somewhere around $3,400, so they definitely increased their equity there if they had just invested it. I found a really cool website that did all this math for you. If you had invested in this stock with this amount over this long, this period, how much would you have if the dividends were reinvested? I thought that was a very nice kind of thing. I was going to be releasing a video on my estimated dividend income for 2018, but I just have not released that one. I don't think I've even edited it yet. So I'll be doing that. First stockbroker to offer 24-hour trading, TD Ameritrade. They'll be allowing users to trade between Sunday and Friday. There's specific ETFs on there. Not something I would do myself, but I know a lot of people that do Forex, like foreign exchange, and just they exchange currencies and such like that. So I posted a video about 5 stocks with dividends next week, which we released here. We have the article and the video on the website. Robinhood announced Thursday they're going to allow 5 states to begin trading cryptocurrencies on their platform beginning in February. So California, Massachusetts, Missouri, Montana, and New Hampshire are all, they're going to be the ones that are allowed to buy and sell cryptocurrency. Some of them include Monero, Litecoin, Dash, Bitcoin itself, Bitcoin Cash, Ripple, and a few others on there. I believe Litecoin and Ethereum, those are always the ones, the primary ones. So if you buy and trade over on Coinbase or Kraken or some other exchange, I will probably end up switching over to Robinhood and doing my trading on there, because Robinhood's been around since 2010-11, so they definitely have some history versus some of these other exchanges, such as I know one of the ones over in Japan got hacked for 200 million, something like that. So that was an interesting article I was reading through. Saw this on one of my coworkers' desk, decided to kind of take a picture of it, because the main one, it goes over kind of Robert Kiyosaki's thing. It takes money to make money. When it doesn't, you can, you borrow and you buy with borrowed money, which then makes you more money. So if it takes money, it takes money to make money, then where did money come from? And he said, God. And he said, don't let them hear doubt in your voice. So I thought that was a really interesting little thing. I kind of researched a little bit more on Robinhood. So you do have to have a Robinhood account. So I posted my referral link on there if you are brand new to Robinhood. I don't recommend starting there. I recommend starting with a Roth IRA, either on M1 Finance or Merrill Edge. But if you have maxed out your Roth 401k, Roth IRA, you can sign up for Robinhood. If you're interested in getting started on cryptos, you can sign up for Robinhood. We would both get a free stock. Then you head over to crypto.robinhood. You sign up to get early access. You type in your email address here that your account is in there, and then you would get queued up and get early access, and you'll get in line. So I have 169,000 people ahead of me, which isn't that many. Intel released earnings. They blew it out of the water. It beat expectations by 21 cents, beat revenue by $760 million. AbbVie also released some earnings that did very well this week. Colgate released some earnings that made their stock tank a little bit. Those are 3 I hold. Upcoming events coming up for next week, February 7th. 5 stocks with dividends next week, so that'll be coming up next week. Our group over at Stocks, Dividends, Value Investing, Real Estate, just a really investment group. We're at 39 members, so I welcomed all of our new members to the team. Ask them, what's your area of expertise? What are you seeking to learn? Kind of getting some responses there. So that's definitely what I wanted to try and do. I'd like to create a community of like-minded individuals that just kind of want to share information, talk about what they're going, what's going on. I'm interested in a whole bunch of different things financially related. I'm trying to get into real estate sometime this year. So that's going on. Dell's considering re-IPOing. They went private back about 4 years ago. Mr. Dell decided, he wants to create some additional funding, so he's considering doing an IPO. This affected the VMware stock. They went up nearly 9%. I put an article there that I kind of read through, and that is basically it. That was posted over on Facebook. As far as the indexes go, S&P, the NASDAQ here, let's start with the NASDAQ. The NASDAQ jumped 2.3% this week, and then the S&P 500 jumped up 2.2%, and then the Dow Jones jumped up by around like a 2.1. So the three major indices finished Friday with new all-time highs. So that's amazing. All of our indexes here are, they're up year to date between 7.5% and 8.7%. So in a year, the average return is 7 to 10%. So you could basically sell off if you wanted to and have your earnings for the year, or you could just stay in and possibly get over 20-30% this year. Who knows what the stock market's going to do, but it's definitely looking like a bear market. So continue to invest, and if you have not started, you should get started. Now let's see here. Government shutdown happened this week. Before we talk about my weekly recap, things that happened this week, we had the government shutdown. They shut down for 3 days. It's the first time since back in 2013. It was mainly due to they passed a short-term funding bill that'll keep the government open until February 8th. The reason for the shutdown was Democrats had resisted to sign forcing the shutdown, and then they brought it back up because Republicans promised to address the Dreamer program, and I know there was a lot of my Facebook friends on there that were talking about the Dreamer program. Excuse me. I was more worried about veterans out there. Being a veteran myself, a lot of my friends, they were going to the PX, they were going to the commissary. These things were closed. They couldn't buy groceries. It was all closed. So people overseas got kind of stuck. Kind of bad. Let's see here. Anything else happened this week that I remember? The U.S. dollar fell, so the U.S. dollar index made a sharp move in reaction to a couple comments, ultimately ending in the week lower by 1.6%. So the U.S. dollar is at 88.92, which is one of the lowest points in 3 years. So if you're not invested, your money is losing its value very quickly. Not only with inflation, but also the dollar is, going down. So that's awesome little fun stuff here. Over to the weekly recap of my changes. My portfolio, I fully funded my Roth IRA for the year 2018. I don't believe I'm going to be adding any more money into my broker anymore. I have my cash manage account. I have my Roth IRA. I'm rolling over my 401k, my old one. I'm going to make a video on that. I actually have a PowerPoint slide on it, death by PowerPoint. So I'm rolling over my 401k. I started my Roth 401k at my new work. I'm trying to go and buy a house now. I'm either going to be buying another house and then renting out my current one, or I'm going to be buying 1 or 2 rentals and continuing to live in my current one until the market comes down a little bit on real estate and I'm able to just buy the other house that I wanted. So I have some decisions to kind of come up with in 2018, but that's one of my goals. I want to buy more real estate instead of investing in dividends, bonds, 401ks, IRAs. I want to venture out into real estate. So I'm going to be creating an LLC, my limited liability company, for either my media portion on YouTube, my website, and some digital products, and then have another LLC related to just real estate. So they can't be cross-referenced. So I'll be starting up 2 different LLCs, and I can showcase some of the work that kind of goes into doing that. Let's see here. I don't know where I was talking with that, but I was talking about goals. Those are goals. I need to make a whole video just on goals alone. So, weekly index recap. We already talked about the three indexes. My portfolio up 3.8%, mainly due to, I believe, like Lowe's, Intel, AbbVie. I had a whole bunch of stocks shoot up. CenturyLink is back over positive when everybody was telling me, oh, the stock's going to fail. I was down 25% in November. It's back up positive. I got a yield on cost of 15%. That level 3 acquisition's working out. It's going to continue to work out. They were upgraded to a $22 range. I said I expected a 22 to 26%, $22 to $26 range in the next 6 to 9 months. So it's definitely working in my favor. So good portfolio changes for the week. Friday, I met up with the S&P 500. It moved up by 1.5. I moved up by 1.5, or actually 1.18 is what the S&P 500 moved up. I moved up by 1.18 as well. So definitely kind of kept up and then beat them throughout the week. I don't think I had a negative day this week, so that's why they kind of gypped out there a little bit. But weekly dividends have made out $30.74 from Cisco. So this is the third week of the year. It's last week I made $49.02. This week I made $30.74. That gives me a yearly total of $110.33 for 2018. My 1, 4, 7, and 10 months, those are my lowest paying months right now. So January, April, July, and October, they used to pay me around $120. I fully funded my Roth IRA, and I had been looking at my real estate investment trust, my REITs. I had 3 of them I talked about. I had Reality Income, I had WP Carry, and DLP, I believe, is the other ticker symbol. I have them on another video. I went over the 3 that I believe are great long-term buy and hold real estate investment trusts with interest rates rising, the new tax reform bill giving some tax deductions, 20% tax deductions towards REITs. I'm going to continue to buy and, I'm going to continue to hold my REITs in my CMA account. I'm buying some REITs inside my Roth IRA. These will be completely tax-free once I hit 59.5. And so I bought 2 shares of Ford with some dividends from last week, and then I bought 13 shares of Reality Income at $53.92. They fell down this week. I thought it was a great bond opportunity. So Tuesday, or actually Wednesday, when's the 24th? When was the 24th? 24th was Wednesday. Okay, so I bought 13 shares of Reality Income at $53.92. Bought some more on Thursday at $54, and then bought 15 shares of WP Carry, then 5 shares, 5 shares, 5 shares. So I made a mistake last time I bought Edison International. I put my full equity I was willing to buy into the stock at the very beginning. That was complete and terrible idea, and I learned from my mistake. I don't normally do that, but I did it, and I'm down about 10% in the position, and I may add more into that position just to kind of bring my averaging down, bring the equity up. But at the same time, I already had a plan with the money I was willing to put into my Roth IRA, and that was going to be going towards REIT. So I'm going to be buying 60 shares of WPC, and I think I'm okay with my Reality Income stake now. So I'm pretty happy there. Going into next week, I'll be continuing to kind of watch WPC and average down, buying 5 shares at a time of the stock until I'm fully into the position. So I did buy a few more REITs. I'm using that time to buy great long-term dividend stocks. All, WPC, Reality Income, they've all been paying dividends nearly 20, at least 10 years or more. So they're very resistant to the stock market crashes that may or may not happen anytime soon, but they also have great up potential in the future. So total profits this week, because I didn't sell anything, I didn't make any profit. So adding 2 shares of F to my portfolio will increase my quarterly income by 30 cents or $1.20 in a year 26 shares of Reality Income will increase my monthly income by $5.69 or $68.33 in a year. And 30 shares of WPC will increase my quarterly income by $30.30 or $121.20. So in a year. So total dividend increase, I increased my estimated dividend income by $190.72. I'm still about halfway funded in my Roth IRA with the funds that I added in, so I will definitely be continuing to buy more stocks inside of there until I'm fully funded within my Roth IRA, and then I'll be getting dividends inside of there, which I'll then be buying more shares of whatever is down in my Roth IRA. So that is definitely nice there. So if you do go and check out my website, if you guys would like to share it, I do have links in order to share that. If they are not there, then I will add them there. I talk a little bit about the snowball effect. I have the book on my desk. I have a whole bunch of books on my desk right now. I have the Guide to Investing by Robert Kiyosaki. I have the Snowball Effect, the Single Best Investment, and a few others here. So always like to be reading. I'm going through with a highlighter right now. Merrill Edge, I don't think I made a video on their research platform. I went over some insights, went over their global research tools, talked about the reporting tools. It's completely free to sign up for Merrill Edge. I know Ryan over at the Independent Investor, he's the one that pointed me onto Merrill Edge in the first place, and it's been a great platform. You can do a lot of research on here. Some of the main things I had talked about was, recent news pertaining to your stocks, some of the ups and downs of the S&P 500, that specific day, so you can see when. I talked about how their research tools are in here and how each specific sector do, whether the stock was either upgraded or downgraded. So I kind of go over that all in this video that I'm releasing up here shortly. Now, I wanted to talk about two stocks this week that, I was watching a variety of stocks. Colgate, they released some terrible earnings. They fell in price by, let's just go to 5 days. So they fell in price by 5%. This is basically everything that I had made in the last few months. I bought it back in September. Maybe I bought it a little bit after. I don't remember when I bought it, but I bought it at a point where I believed for the year that I had a great buying opportunity. I mainly looked at their dividends. They're not growing too fast as far as revenue grows, but they're consistent with paying out dividends, so it was a great buy and hold stock. They released some not so great earnings, or maybe they released some news. I read something about them. Either way, they fell down a little bit today. You can see here they fell down by 4.85% this today. When Resorts, their CEO was he had a whole bunch of accusations against them of sexual harassment and such. And Jeremy over the financial education channel, he made a whole video on this. So recommend to go check out his channel, watch his video. He talks about a whole bunch of good points on Wynn Resorts. I don't know if I've ever owned Wynn. I know I've owned Las Vegas Sands, LAS, and I don't know if I ever owned Wynn Resorts. I know it's a great. It has a low dividend yield, but they do some special payouts. A couple years ago, they've done special payouts. Abbey, they released some great earnings. They shot up very nicely today, up 10%. Let's see, what am I looking at here? Oh, here we go. Price. So up. This shows 17.5%. Maybe over the week. Yeah, over the week they're up very nicely. Intel over the week, they're up very nicely. They released some very nice earnings. I posted that over my Facebook page. Pfizer, they also released some very nice earnings. I believe they were up higher than this. I thought they had actually, okay, 5%. So yeah, right around there, right around that area. StarBucks fell quite a bit here this week, and NWL brand. So these are the two I wanted to talk about. So StarBucks, just kind of looking at the year, the price and the yield, taking a look back over at the original chart, we can see that the yield right now is at its highest point. If you were able to buy this stock back in September, you would have bought it at a very nice discount where it was at $53, and the yield was exceeding the price by quite a bit. Whereas, Starbucks is still a great stock. They released their earnings, and their future wise, their growth isn't there where they would like. I believe over in China, or maybe their it's like a project that's going on over in China. I remember reading a little bit onto this, but anyways, kind of just looking at the fundamentals of it. The yield over is exceeding the price. Their PE ratio had fell from a very high 28.30 down into the 19 range here. You can see that sharp drop of the PE ratio. Their price to book value is sitting at a 19.1. Let's see, price to book is at a 15. So their price to book value is a little bit higher than what I would like to buy it at, but this is a growth stock. If you just look at their growth over just a year alone, let's see, year, we look at percentages and we look at Starbucks. If you just look at it over the year, I don't believe this is correct. Hold on. Okay, so this may not be fully up. Yeah, it says January 27th. So it actually is correct. So I'm looking at this chart here. Over the year, they're up 3.13%. So if you bought them during September, you're definitely up on your initial buy. But if you bought them at the beginning or at this peak point, you may be down in your position right now. But still, they have some good growth potential. They're trying to win the customers back. I don't go to Starbucks myself, so I go to like a local. I go to the Human Bean. It's not actually a local place, but I prefer their coffee over Starbucks. Let's see here. So, but if you are interested in checking out Starbucks, I think it is looking like a pretty good opportunity to just do a little bit more research and find out, if it is going to be a good buy here. I did kind of notice that their yield did cross over their price, so it would be definitely something, if I was interested in Starbucks, to do a deeper dig. Now, NWL brands, this one here, I believe they do like the Tupperware. They used to have actually a really pretty decent history here. Back prior to, you can see this nice steady increase. They were paying out dividends very nice over like a 10-year period, and then the recession happened back in 2000, like the whole Y2K or the tech bubble that took place. They didn't decrease their dividend, but they did not continue to increase it, and then the 2008 crash happened. They cut their dividend very sharply here. Their price sank along with it. You can see this, this is the stock price right here that took place. They peaked out, and then as their stock fell, they may have done actually a stock split here. That may have caused their stock to kind of, looks like it was cut in half. Definitely do some research there, but just kind of looking at this year alone, looking at the price and yield, you can see that this yield here, that's one of the highest yields you would have been able to get into this position in nearly 10 years. So that kind of gave me an idea to kind of look at it a little bit more. What's their price PE ratio? What is their price to book value? You can see that their price to book value is at a 0.97, meaning that if you bought them at this current price, you're buying a company with its assets. You're paying less for the price than what the company's book value is worth right now. So you're actually buying it below its book value. It was trading back in 2016 at a PE ratio of 55 or higher. It did have a bit of a pullback, still their price in there. So you can see here that their price remained up there, whereas they became more profitable, which caused their PE ratio. So you can see here, this is their revenue here. They became more profitable after 2016, so their stock price remained about the same, but their PE dropped down as their revenue began to climb. But they released some, not too bad expectations for the future. Over the long term, this didn't look too bad. So let's go ahead and knock out PE, bring in free cash flow and net income. Hold on one second, let me call. So over the last 10 years, they have been pretty mellow. You can see they picked it up in 2016. But you can see that their price had been climbing, whereas their revenue, their free cash flow, and their net income was pretty stale over the last 10 years. So their price coming up to these high points wasn't really warranted. So they've kind of fell back down into this actual, this nice price range where I believe they're probably, their book value, they're below their book value of the current stock, the book value. So I think we did a video on book value in the past talking about how that's all calculated. Anyways, they released, just taking a look at just percentage changes here, you can see that their revenue expectations, take out their price, we can see that it had done, the revenue had gone pretty flat over the last few years. It did increase, and then they recently announced that they're not going to be meeting certain expectations, which caused the massive sell-off of their stock price, which I don't believe it was really warranted, but I would definitely have to do a little bit deeper, not digger, deeper, and deeper research into the stock to kind of find out what's kind of going on. And I mean, I could do that over here at the Merrill Edge platform. All I would have to do is type in their ticker symbol and take a look here, take a look at their stock story, go over, who are they, and they kind of do talk a little bit about who their brands are here. So we have Tupperware, Helen of Troy, and Sally Beauty. These are all peer companies, so companies with large market caps usually move similarly to the markets, where companies with smaller market caps might show more volatility. So NWL brands industry peers are the companies who compete with it. So these are some of their competitors, but you can see that these are much smaller, a quarter of what NWL is. So kind of goes over how they're doing, their profit versus their operating expenses, and so on. So I was looking into it a little bit. I don't think I would ever have a position in it, just because over the long term, I'd like to just build my portfolio of a long term, not having to worry about if I have to, pull out of the stock because the dividend got cut like GE. But it could be a good swing trade just for buying and holding for 2, 3, 5 years and then kind of selling it, depending, or just even short term, it's going to rebound back over the 1% or the 1 price to book value. So not to make this video too long, we're already at 27 minutes. So that is it for this video. I hope you guys have enjoyed it. If you did think that this video was too long, let me know in the comments. Say this video is way too long. I want to thank everyone who stuck around and actually watched up to this point. If you did like the video, hit the like button below. Remember to subscribe if you're brand new to my channel for all sorts of financial videos. If you have any questions or want to say hello, go ahead and leave a comment below. I will always reply back to you guys. As a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help you guys make your money work for you guys. So that's it. Thank you guys for tuning in. I will see you next time. Have a great day. See you guys Monday. Bye.